Hello, friends. How are you? Only just a few days before, I had discussed about one great trader, Mr. Jesse Livermore, and I had discussed his whole life history, how he was a lad and worked with a share broker, and then from that position over years, he improved himself and transformed himself into one of the greatest trader of the world. He was Jesse Livermore. So today I'm not going to discuss his life as such, but I'm going to discuss some of the wisdom quotes he has given for all the people who are doing the trading in the trading world. So, without wasting the time, let's go directly to his quotes. Quote number one is buy rising stocks and sell falling stocks. What he is saying is if some script is going up and up, it is in upward tendency, then it must be bought. And to understand whether it is in upward situation going up and up, we use several indicators, several means candlesticks, that kind of thing. Only when we are confirmed that it is rising day by day and will keep on rising for a particular period of time, say 1 or 2 months, or for next 6 months or 2 years, it will be in rising tendency, only then buy it. Otherwise, if something is going down and every day it is going down, then you have to sell that. So the rule is very simple. The quote number one is buy the rising stocks and sell falling stocks. That means if the stock is going up, buy. If it is going down, sell. This is quote number one of Jesse Livermore. Second is do not trade every day of every year. What he is saying by this quote is there is no need to trade the almost every day, and if there is no trade, if nothing has come to your mind, your study and the homework is not throwing you any kind of trade, then there is no need to trade. You are trading simply for the sake of trading will not give you the profit, because if there is no trade, there is no trend in the market, then you would be dabbling in the market, and sooner or later you will end up in the big losses. So his quote number two is do not trade every day of every year. So you have to trade only when there is the indicator, there is a certain trade, actually your experience and your knowledge is telling you there is a trade, only then take it. Otherwise there is no need to trade every day. Trading for the sake of trading is not a good idea. So this is quote number two. Next comes the trade quote number three, trade only when the market is clearly bullish or bearish. What he is saying by this line is only trade when something is in a bullish phase, so you will buy. If something is in bearish phase, you will sell. So the quotation number three says trade only when the market is clearly bullish or bearish. So this was the rule 3. So first convince yourself what the market is like. This is bullish, this is bearish, or this is going nowhere, this is stagnant, there is no much fluctuation on either side, it is neither going up nor going down. So it is said that market is stagnant. So when the market is stagnant, you do not have to do anything, you do not have to force yourself for the trade, because there would not be a trade. So his quote number 3 is, trade only when the market is clearly bullish or bearish. Quote number 4 is, this says, only trade after the action of the market confirms your opinion and then enter promptly. It says, if you form an opinion about something, you have to trade only when the market confirms your opinion. Otherwise, there is no need to trade, because your opinion may be wrong. You may be having some opinion that something will go up, but actually it will go down. Or you are thinking it will go down, but actually it will go up. So, unless and until the market confirms your opinion that yes, market is agreed with you, market confirms your opinion that you are right, only then go for a particular trade. So the rule is very simple. Trade only when the market approves, confirms your opinion, and then enter promptly. When your opinion is confirmed by the market and you are taking time to enter into the trade, your whole profit will be lost. The opportunity would be gone, because market is so fast, so dynamic. Within 10 minutes, I think it is a big period for the market sometimes. So when your opinion is confirmed, first have an opinion, second the confirmation of the market, and the third one, moment it is confirmed, you have to enter promptly. Otherwise, the opportunity may be lost. So the quotation, and now we go to the quotation number 5. This says, continue with trades that show you a profit and in trades that show you the loss. It says that whenever a particular trade is giving you the profit, let that run, because your profit will be higher. And if there is a loss in a particular trade, you have to cut that loss. But actually, the traders do opposite. When the losses are there, they think, oh, there would be a profit, it will come back or something like that. And this way, they keep on going, and losses become so substantial that at one point of time they panic and they cut everything. But by that time, the losses, a small loss, converts itself into the substantial loss. So he is saying, the fifth quote is, continue with the trade that show you a profit. That means whenever there is a profit, continue with that trade. But if a trade is giving you the loss, it should be cut, square off immediately. So actually what he is saying is, whenever you have a loss on a trade, be fast to cut your losses. But if any trade is giving you the profit, be with that trade unless and until the trend reverses, or you think the situation has become different, so then you can take the profit. Otherwise, if everything is okay, then you have to allow your profits to run. Then comes the sixth quote that has been given by Jesse Livermore is, in trade, when it is clear that the trend you are profiting from is over. The sixth quote he is saying is, you have to take profit if you are of opinion that now the trend from which you are getting the profit is over. So you have to quickly take the profit, because if you do not take the profit will again keep on going less and less, and lastly it will convert into the loss. So sixth is, trade when it is clear that trend you are benefiting from or profiting from is over. That profit trend is over, so you have to book your profit. Seventh quote he has given is, in any sector, trade the leading stock, the one showing the strongest trend. What he is saying is, in any sector, for example, if you take the sector of jewelry, so Titan comes in the mind, that leading stock that comes in the mind. So you have to trade that thing, that share that is showing the strongest trend. So this rule says, in any sector, it may be automobile, it may be cement, it may be iron and steel, it may be anything. In any sector, that trade the leading stock, the one showing the strongest trend. So in any sector, try to trade the share that is showing you the strongest trend and be that trend. And then 8, he says, never average losses. People try to average the losses. When share goes down, you keep on averaging, but that averaging leads you to nowhere. So his 8 rule says, never average your losses. So people think, by averaging your my losses, I would be someday come into the profit. But this does not happen. So this is a trading rule that he is giving to all the trader community, is never average losses. Losses should not be averaged out. So once you have the loss, do not double down on the quantity, or buy more quantities simply because your acquisition cost or purchase cost is going down. Never average losses. If you have the loss, you will have to take the losses. There is no other way. Maybe in another trade you will have the profit, and that can be set off. That is another part of the story. But in a particular trade, if something goes wrong, take the losses. This is the rule. Take the losses. Now comes quotation number 9. Quote number 9: go long when the stock reach a new high, and sell short when they reach a new low. This is 8th quote given by Jesse Livermore. Then comes the 10th quote. He's saying, whenever something has gone down, do not be the involuntary investor. Sometimes you purchase something and it goes down. So what you think? Just skip these things with myself. Then someday it will come up. So knowingly or unknowingly, directly or indirectly, what you are doing is you are keeping that stuff with yourself in the hope of making it profitable, and you become involuntary investor, because trader is different, investor is different. So when the trader becomes involuntary investor, he does not want to be an investor, but he is choosing to be an investor temporarily because he is in the loss, should be avoided. So this was the 10th. 11th is, market are never wrong, opinions are. What he is saying is, market is never wrong. Our opinions may be wrong. What beautiful lines he has given to the trading community is, markets are never wrong. Markets can never be wrong. Markets are always right. But opinions can be wrong. Next is, quote number 12 is, you get the highest profit in the trade that shows the profit right from the beginning. Sometimes you, as a trader, if you have traded, you must be knowing that in some trade, right from the beginning, the moment you enter, there is some profit, and that profit keeps on increasing and increasing. You must have, there is a pleasant sensation in your body, in your mind, in your brain, that right from the beginning you have the profit, and it keeps on giving you the profit. So what he says, Mr. Jesse Livermore says, highest profit you get in a trade that shows the profit right from the beginning. And then his quote number 13 is, no trading rule is 100% foolproof. No trading rule, whatever may be your method, whatever may be your style, but no trading style or method would give you 100% profit 100% time. Means 100 means out of always it will not give you the profit always. Sometimes it may be 90% okay, that method 80% okay, or something like that, but it can never be 100% okay. So whatever technique you are using, whatever style you are using, that trading, there is bound to be some losses, because it can never be 100% accurate and exact. So comes the quote number 14. This is never long a stock because it has seen a big decline from previous high. Never long a stock because it has seen a big decline from the previous high. This is 14. Then 15 comes, never sell a stock because it is high priced. If some stock is high priced, it does not mean that you have to sell that, because there are some stocks that keep on rising, that keeps on going up and up. So it is not a right candidate to sell that particular stock. Then comes the 16th quote. He says, the human side of every person is the greatest enemy of the average investor or a speculator. What he says is, human side is the greatest enemy of the investor and speculator. Human side means human side will always be exposed to the greed. Human side will always be exposed to the fear. The human side will always be exposed to the biases, different kind of prejudices. That is the human side, and that is the greatest enemy of an investor, a speculator, or trader. What a beautiful line he has given to all of us, to the whole world. That greatest enemy of investor and speculator is the human side. And what is human side? Is your sense of fear, your sense of your ego. How I can be wrong? How I can be so stupid calculating this? How my method can be so grossly wrong or miscalculated the whole situation? So that is the human side. When you feel egoistic, when you feel a kind of panic, when you feel a kind of shudder in your spine, when everything goes against you, you made your homework, you did everything in your hand, and you were 100% convinced that everything is going to be right. But then, moment you enter a trade, everything goes against you. If everything goes against you, then what you do? You are stuck by the panic. You are stuck by the fear. The financial loss makes you immovable, freeze. You are petrified. So these are the human side. So that is the time where you take the worst of your decisions, and that leads to the financial losses, economic losses, and your loss of your mental coolness. So all those things happen. Then comes 17th quote. He says, wishful thinking should be banished. What he says is, sometimes we think about a lot about profit, a lot about loss, a lot of things that we will be like this, we will be like that, we will be like uh, trader like Jesse Livermore or something like that. We start thinking like that. Even though we have little knowledge, we have no much knowledge, but we start thinking ourselves into the top 10 league of the traders of the world or of a particular country. So this wishful thinking must be banished because it will lead to the financial disaster, debacle. So he says wishful thinking must be banished. Then his 18th quote says big moments take time to develop. What does he mean to say? What he means to say is you will have to be patient. Sometimes if you enter in a particular trade, you will have to wait for a particular time, a specific time. Only then allow the movement to happen. If you take decision within 2 days, but the movement will take 2 months or 6 months, will you be able to maximize your profit? No. So what he says to all the trading community is that we must have the understanding that big movements take time to develop, and to profit from the big movement you will have to be patient. Sometimes you enter in something and then you have to wait 1 month, 2 months, 6 months, 1 year to optimize the profit. Only then you can have a big profit. So what he is saying is big movements take time to develop. That takes time. So every trader must be patient so that that movement should happen over the time. And the trader should develop the patience in a mental cool or kind of stomach. He has to develop. He has to detach himself from particular trade and should not be going like blitzkrieg or lightning war, or you are doing playing some kind of video games or something like that. Nothing. If you have taken some stock or scripts, just wait for the movement to take place. And this period may take time of 2 months, may take time of 1 week, 2 weeks, or may even take a time of 2 years, depending upon the situation. It all depends on the facts and circumstances of the case. It depends what you have taken, how you have taken, at what level you have taken, at what level you have to exit from that particular thing. So all those things we have to consider. And then he says, yeah, it is not good to be too curious about all the reasons behind the price movement. What he says is we need not know all the reasons of the world that something is going down, why it is going down. We do not need to know all the reasons of the world that if something is going up, why it is going up. Because in the market there are n number of things which will influence the price movement at any point of time. It may be the foreign exchange movement, maybe the Indian rupee or US dollar movement, maybe the gold rate, maybe the FOMC like Fed decisions, RBI decisions, central government's decisions, devaluation of currency. There are so many things that are happening across the world economy, and which event has done this kind of movement, we can never know. And for one movement, there is no single factor responsible. There are different sort of factors responsible. Some will make it go up, something will make it go down, and then the net effect will be either positive or negative or something like that. So what he is saying is, it is not good to be curious to know all the reasons behind the price movement. It is not good to be too curious about all the reasons behind the price movement. There is no need to know that. If you know something is going up, profit from that. If something is going down, profit from that. Does this make sense to know every reason why it is going up or why it is going down? A trader is not concerned why it is going up, why it is going down. All he is concerned with is his opinion and confirmation by the market that this will go up. So he will profit from that trend, or if something will go down, so he will go short on that, or he will short that thing to profit from that declining trend. And the last quote from my list is, some quotes maybe I would be missing of Jesse Livermore, but all these are important quotes. So last that I have written is, it is much easier to watch a few than many. What is the meaning? What the Jesse Livermore tries to say to us is, if you have many trades, you may not have energy, you may not have the intelligence, you may not have the capability, competence to watch all of them. So it is better to identify good trades, very good trades, excellent trades in which you do have your conviction, you have done your homework, you have done everything. Sorry. And then enter into that, instead of entering into different trades, many trades that you cannot watch, you cannot monitor, you cannot track. And as by now you must be knowing, the market is so dynamic. Within 1-2 minutes everything will change so drastically. Your profits will turn into loss, your loss will turn into your profit. Market is so dynamic. This is just like surfing in the ocean. It is risky, it is dangerous, as well as this gives you the thrills of surfing. So all those things you have to consider. And in today's video, I have discussed the quotes given by none other than Mr. Jesse Livermore, one of the greatest trader of the world. And I hope that we all will profit from that, whether we are investor, we are a speculator, we are swing traders, we are scalpers. So whatever we are, these quotes has everything for everyone, and we can have our pick and choose, and then we can have a good career in this area. And with this quote, I would like to sign off. But if you like, I would like to like this video and subscribe this video and send it to all the people who need that. And with this, I sign off. Bye bye. Good night.